Today we turn our attention to Chile, a country of striking landscapes and vibrant culture. For years it was hailed as South America's economic model, a beacon of stability and growth. But as we move into 2025, Chile is facing an undeniable economic slowdown. This downturn is raising some very tough questions about the nation's economic future. The most pressing question: why has growth stalled so dramatically? The answer, as you might expect, is complex and multifaceted. When we look back over the past 18 months, it becomes clear that economic momentum has steadily faded away. Across various sectors, businesses are feeling the pressure, facing tighter margins and uncertain prospects. And perhaps most importantly, families are feeling the pinch of rising costs and economic uncertainty. So to truly understand this significant shift in Chile's economic landscape, we need to delve into the data and analyze the key indicators. We'll examine GDP, jobs and employment figures, and of course, the ever-increasing cost of living for ordinary Chileans. For decades, Chile thrived on open markets and international trade, particularly its lucrative copper exports, which played a vital role in lifting millions of people out of poverty. However, this heavy reliance on global demand, especially for a single commodity like copper, is inherently risky. So, when copper prices experience a significant fall, the impact reverberates throughout the entire Chilean economy, and that's precisely the challenge that Chile faces right now. It's a true test of the nation's resilience and its ability to adapt to changing global conditions. Today, we're going to break down the 5 key pain points that are contributing to this economic slowdown. We'll take a close look at copper mining, the service sector, and the difficult choices that are now facing policymakers in Santiago. Our primary goal is to provide a clear and data-driven look at the challenges confronting Chile, and crucially, we'll explore the possible paths that could lead Chile back to sustainable economic growth. This story is of vital importance for all Chileans, as well as for global investors who are watching the situation closely. So, let's dive right in and begin our analysis. Let's start with the basics. GDP growth, the broadest measure of economic activity. Understanding this metric is crucial for grasping the overall health of Chile's economy. In 2024, Chile's GDP grew just 1.5%. This figure represents a significant slowdown compared to previous periods of expansion. And looking ahead to 2025, the projection is even more subdued, estimated at only 1.2%, a sharp drop from previous years, signaling potential challenges for the Chilean economy. Slow growth inevitably means fewer jobs being created and consequently less opportunity for the workforce. The impact is already visible, with unemployment having climbed to 9.2%, up from 8.5% just a year ago. This increase reflects the growing difficulties faced by Chileans seeking employment. More Chileans are struggling to find work, highlighting the strain on the labor market, and as a result, household budgets are stretched to their limits. In response, the central bank raised interest rates in an attempt to combat inflation, peaking at 7% in early 2024. These high rates did succeed in cooling inflation, but also had the side effect of slowing down both business investment and consumer spending. By June 2025, interest rates were eased slightly to 6%, but the economy still feels the chill from the earlier restrictive policies. Inflation, which had once surged to over 10%, has since dropped to 4.5%, a welcome improvement, but still above the central bank's 3% target. Unfortunately, prices for essential goods and services remain stubbornly high, continuing to squeeze families' budgets. Therefore, the fight against inflation is far from over, and the high cost of living remains a daily concern for many Chileans. These numbers paint a clear picture and set the stage for understanding the sector-by-sector impact of these economic forces. Next, we'll delve into how key sectors like mining, manufacturing, and the diverse range of services are coping with these challenges. The data collectively tells a story of both resilience in the face of adversity and the very real pain being felt by many. Chile's current economic crossroads are clearly defined by these hard numbers and the trends they reveal. Let's take a closer look at the specific sectors that are driving the Chilean economy and shaping its future. Chile's economy, historically, has been largely built on its abundant natural resources. These resources have shaped its economic identity and continue to play a vital role in its overall prosperity. This is especially true for copper, often referred to as the lifeblood of the Chilean economy. However, in recent times, global demand for copper has shown signs of weakening. This is particularly noticeable in demand coming from China, a major consumer of copper. Consequently, copper prices have experienced a noticeable drop. This price decline is cutting into revenues and leading to a decrease in investment within the mining sector. This economic slowdown is creating a ripple effect that extends throughout the entire Chilean economy. It's significantly impacting suppliers and resulting in job losses across various sectors. The manufacturing sector, which is closely interconnected with both mining and agriculture, is also facing considerable challenges and struggling to maintain its footing. Recent data indicates that output fell by 2.1% in 2024. This decline is reflected in factories running significantly below their full production capacity. The services sector, which is Chile's largest employer, providing jobs for a significant portion of the population, is also grappling with its own unique set of economic difficulties. High unemployment rates and increasingly cautious consumer behavior are translating to reduced spending in key areas like retail, restaurants, and the tourism industry. The recovery of the tourism sector has been notably slow and uneven. This is partly attributable to the strength of the Chilean peso. When we look at agriculture and fishing, the data reveals a mixed bag of economic results. There's been strong performance in fruit exports. However, rising agricultural costs and increasingly unpredictable weather patterns are negatively impacting overall profitability. The fishing industry is navigating a landscape of tough competition in the global market. They are also dealing with the challenges of fluctuating fishing quotas. Across all of these diverse sectors, the underlying story remains consistent. There's significant pressure stemming from both global economic trends and domestic economic headwinds. The story of copper and its performance is absolutely central to understanding Chile's current economic situation. So let's dig a little deeper and explore this further. Copper is Chile's economic lifeblood. When prices are high, the country prospers. When they fall, the pain is immediate. In early 2023, copper traded above $4 per pound. By mid-2025, it's barely holding at $3.60. That drop means billions lost in export revenue. State-owned Codelco and private miners have cut investments and delayed projects. Suppliers and service companies feel the squeeze, leading to job losses nationwide. Chile's dependence on copper exposes it to global market swings beyond its control. The lesson over-reliance on a single commodity is risky. Diversifying exports is essential for long-term stability. Policymakers are now under pressure to act. The copper conundrum is a wake-up call for Chile's future. Next, we examine the inflation and interest rate battle. Chile's central bank faces a tough balancing act, fighting inflation without stalling the economy. In 2023, inflation soared above 10%, fueled by global energy prices and post-pandemic disruptions. The bank hiked interest rates to 7%, cooling inflation, but slowing growth. Businesses cut back, consumers delayed big purchases, and unemployment rose. By mid-2025, inflation is down to 4.5%, but still above target. The central bank is cautiously lowering rates, now at 6%, but risks remain. Cut rates too fast, and inflation could return. Keep them high, and growth could stall further. Every move is scrutinized by markets and households alike. The tug-of-war isn't over, and the stakes are high for Chilean families. Fiscal policy is the next battleground. Chile was once known for fiscal discipline, saving copper windfalls for tough times. The pandemic changed that. Emergency spending pushed government debt from 28% to nearly 40% of GDP. While still moderate, this rapid rise limits future flexibility. Higher debt means more money spent on interest, less for education, healthcare, or infrastructure. Slow growth makes it harder to boost revenues and control deficits. The government is now focused on fiscal consolidation, cutting deficits and stabilizing debt. This means tough choices and careful spending. Restoring fiscal strength is key to regaining investor confidence. Chile's reputation for prudence is on the line. The path forward depends on smart policy and bold reforms. Where does Chile go from here? The slowdown is real, driven by copper prices, inflation, high rates, and rising debt. But there are options. First, the central bank must keep inflation in check while supporting growth. Gradual rate cuts are likely. The government must rebuild financial buffers and stick to fiscal discipline. Diversifying the economy is critical. Green hydrogen, food exports, and tech offer promise. Investing in education, job training, and infrastructure will boost productivity. Cutting red tape and supporting new industries can drive long-term growth. These are not quick fixes, but they're essential for Chile's future. Investors will watch how Chile navigates these challenges. The world is watching too. Thank you for joining us. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.